So continuing chapter 8 here. So the tax liens, how does the tax auction process work? This I think you guys will like. So the taxes on real property become a lien on January 1, but you don't have to pay your taxes in full until December 31st. But you do get billed quarterly for your taxes every 3 months. Um, and if you don't pay your taxes at the end of the year, December 31st, plus 6 months goes by after, your tax collector will order a tax sale, or they should at least. They don't always do it when they're supposed to try to collect the tax money that the city is owed so that they could pay their bills. So when taxes go unpaid for 6 months after the end of the year, they're going to do that. Okay, but they post an advance notice of that sale in 5 places within the municipality. So they could put up a flyer in a library, a flyer in City Hall. Somebody walks by and grabs it. Well, they posted it. So they're also required to post it in the newspaper for 4 weeks, the local newspaper. Owners of the property should receive a notice about that forthcoming sale by mail. But if they don't, the sale's still valid because you know that you owe the tax money. You know that you've been getting the bills. You know that you haven't paid your taxes. Now, the purchaser at a tax sale receives a tax sale certificate. So if you go to an auction and you bid as the investor, what do you win at that auction? They give you a tax sale certificate. You're not entitled to occupy or use the property, though, because you do not receive title. You don't receive the ownership of the property at that auction. If the municipality purchases the certificate instead, and they pay the taxes for you, the delinquent homeowner has 6 months in which to pay the money due and redeem their property. If the certificate is bought by a private party, the redemption period is 2 years. The homeowner trying to regain their property has to pay all reasonable legal costs and interest on the overdue taxes. After the redemption period has passed without the owner redeeming the property, the holder of the certificate could obtain clear title. That means it wipes out all other liens, including a first mortgage, by the legal process of foreclosure anytime within 20 years. I wouldn't wait 20 years. I'd hop on that because who's paying the taxes in the meantime and the other expenses, right? If the municipality forecloses on the tax sale certificate, it's done through a judicial foreclosure before a court. And that special court proceeding reserved only for municipalities to foreclose due to non-payment of taxes is called in rem. It's called an in rem proceeding. I forget what that means in Latin. Somebody looked it up once in class, but I forgot what that means. So in rem proceeding against the property. Actually, I think in rem means against the property. And this type of proceeding is available only to municipalities. It does not affect the debtor's credit rating. Like I said the other day, if you get foreclosed on due to non-payment of your taxes, it does not affect your credit because the municipalities don't report it to credit reporting agencies, unlike your lien holder, your mortgage lien holder. That's a different story. But this could even wipe out your mortgage. And the purchaser at these tax auctions, they could get the house for just the amount of money that you're behind on your mortgage payments, that you're behind on your tax payments. So that's a way to get into real estate, invest in real estate without having a whole boatload of money. So I put together this slide, which explains all the details of what we just read through and a little bit more. So the tax sale, let's see how I wrote it up here. If taxes go unpaid for more than 6 months after the end of the year, tax collectors required to schedule a tax sale auction. It must be posted in at least 5 places within the municipality and advertised in the local newspapers for at least 4 weeks. So what does the winner get at a tax auction? The winner at an auction gets to pay the owner's full outstanding taxes. Lucky you. The auction bidder must have all of the money. So what are you bidding on exactly then? You're bidding on the interest rate that you're going to charge the property owner to pay you back. If you're the only bidder and your bid is unchallenged, you get that certificate at an 18% interest rate in New Jersey. Any further bidding by other investors would drive that rate down, because whoever bids the lowest on the interest rate they're going to charge the homeowner wins that auction. So the winner at the auction will get a tax lien certificate that shows the date, the interest rate that the owner needs to pay that investor, the bidder, back by, or face losing the property. The bidder is not entitled to occupy or use the property. You don't get title at the auction. You get a certificate. Now, the owner has to pay back all those filing fees, reasonable legal costs, and the money you put down and the interest that you won it at within 2 years. That's your redemption. That's the owner's redemption period, where they could pay back all the money and still keep their house. But after 2 years, if they didn't pay back that private investor, you can foreclose on them and get that property free and clear. Even if there's a first mortgage still on that house, you wipe it out. You wipe out all other liens on that property, and because two things are certain in life, death and taxes, and the tax auction wipes out all other liens. You get that property just free and clear for whatever you paid in the taxes. Now, if the municipality decides that they rather pay your taxes because maybe they want the property and they don't think you're going to pay it back, the homeowner will only have 6 months to pay them back. That's the redemption period if the municipality buys the certificate. The owner has to repay all outstanding taxes, interest, and reasonable filing fees and legal costs. The investor can foreclose after that anytime within 20 years to get the property free and clear of any other liens. Taxes are first in the lien repayment order. Two things certain in life, death and taxes. You got to pay your taxes. So it wipes out all other liens that may be on the property, including mortgage loans. And once again, the in rem is a special court proceeding reserved only for municipalities to foreclose on you due to non-payment of taxes. So in rem means against the property. So now you would need to check with each municipality how they go about doing their tax auctions. You could check with the tax collector in your town. But here is a resource where a lot of towns use, but it's maybe about maybe about a little bit less than half the towns in New Jersey use this one source. So let's pull it up. This is actually a software development company called Real Auction. They do all kinds of tax auctions, tax deed application software, tax deed management. They do all kinds of software that they create. So if we click over here on, it's realauction.com, and if you were to click on their client list and then go to the not real foreclosed but real tax liens, that software, and see all the clients that use that tax lien auction management software, we're going to filter that list and select the state of New Jersey. And we'll just, you could type a particular municipality here, or you could just hit submit and get them all. And you can see there's 252 municipalities in New Jersey that use this software, this service to manage their tax auctions. So that's, we have what, 560 something municipalities in New Jersey, 565, 562, something like that. So this is about half of the municipalities we have in New Jersey that use it. Now, if you just see cities here, but you don't see anything, a date or says that it's open, then it's not open. Like if you were to click on it, it'll just take you to that website's tax auctions website. And you try to click on preview items and nothing's going to show because it's not open yet. Okay, so they didn't open theirs. You could see the last time it was open was 2023. So they don't have it open yet. All right. So if we close that out, we could scroll down, and here you see one in Barnegat in Ocean Township. Site opens 5/9. Okay, we're already past that. We're a month after this already. So let's click on it and see what's going on in Barnegat. Now you could click on here, see the bidding rules, the results of the auction. You could get the training to see how to go about it, how the tax certificate process works in that town. You have to register for the auction in advance and find the properties that you want to bid on. And you have to put a certified check. You got to check with each town's rules, but you got to put a certified check on file with their tax collector before you could bid in these auctions. All right, for that amount of outstanding money. So let's see, if we were to click on the bidding results, you could see all the results of the auction. Look at a lot of these people that bid on the auction. The face amounts are anywhere from, look at this, $71, $67. They start at 18%. Look at these, they bid all the way down to zero because these things aren't that much. So you probably had an investor that went down and bid a lot. Winning bid. 0%, sold to. Okay, so look at this. It looks like it's the same bidder paid for all of the, bought all of these, almost all of these. And then you had somebody else that bought these other ones. But most of these were at, I don't know why it's saying $1,000. Face amount and then winning bid. Because you're not bidding less than the amount. Struck to municipality. 3%. See, these people are hoping they're really going to get this property for $68. So that means that that owner would have had to have their unpaid taxes for 6 months after the end of the year of $68, plus another 2 years after that, they didn't pay that $68 in order for you to foreclose on them and get the ownership of that property. I doubt that's going to happen over $68, but you never know. Look at this one. They were only owed $5,000. The winning bidder ended up paying a premium. So they bid down to zero, and then they started paying a premium up to $19,500. They're really counting on this property owner not paying that $5,000 back so they could get the property. It's just taken to the auctions. Let's see. Okay, you really got to look it up there. Let me see this one this way. I guess different municipalities. Wow, they really changed this up how they show this auction. All right. Usually you could see tax records are all linked and you can find the information right away. I guess you can do that if you look at the properties that have not yet sold. See, we're looking at the results. If you look at the preview items for sale, there we go. Seabrook, John Ernest and Seabrook. Okay. You could click on the property information. You could get the information about the property. See the map where it's located. Total charges. Wow, this person only owed $2.59 in property taxes, 14 cents in interest. Cost of the sale, $65. This person's property went to auction, really, over $2.73. Then the auction fee. Wow. Wow, wow, wow. That's insane. But anyway, that's how it works. You guys can go through this. By the way, here is that list of all this. I was trying to compose that list yesterday because you got to go to each one of these websites to find the tax information. And you can do the search to see who owns the property, excuse me, and gather other information about the property owner here. But so that's how you invest in tax auctions. It's pretty good deal, huh? You get that property free and clear. You don't got to worry about fixing or flipping, any of that. Look, imagine you get that property. Look at this. What's the most expensive one they got here? 10,000. Oh, this one, 102,000. This guy's way behind on taxes. What is number one? We got to see what code one is. What did he owe on? Code one, miscellaneous fees. 91,000, 11,000 in interest. Maybe they didn't do tax collection on him for a while, but he owed $102,000, and that property status is still available. Nobody paid it. Go to auction on that one. Get a nice property. It's probably a multi-million-dollar property there in Barnegat. See, you got these codes here. Some of them are trash, waste, sanitation. Some of them are taxes. I'm not sure if the T is probably taxes. Let's see. Yeah, we can take a look at this one. This one's still available. Yeah, property taxes. T is for property taxes that were outstanding. So this person, their taxes were well over $1,000, but they didn't pay only $1,000 of their taxes. So their property is going to auction over $1,000. Imagine losing your house over $1,000 or less. You look at my town. I know my town was supposed to be coming up. Linden City. There we go. Opened up last month. Shoot, I missed it. See if I could still bid and pay people's taxes. All right, so that's how that works. I guess we could move on, not stay there too long. You guys don't seem too interested about investing in that, but it's a great way to make money without needing a lot of money to buy real estate, fix it, flip it, and all that. You could have just that small amount of money. You could get it, and somebody will have to pay you back the interest, or you get the money and the interest, or you could get that property free and clear for whatever you paid. All right, income tax. This is something that's always on exams. Income tax issues for home sellers. Yeah.
I just wanted to know, is the redemption period different in every state?
It could be. I don't know. This is just for New Jersey. The redemption period's 2 years. I am not 100% certain on it. I think it is 2 years, but I'm not 100% certain on it. So you'd have to check with each state. So any other questions, or is that good? Okay. So refer queries to accountants or attorneys. If you're selling your primary residence at a profit, do you have to pay income taxes on the profit of that sale? The answer is no. You don't pay any state or federal income tax if you're selling your primary residence for a profit. But you have to live in the property for at least 2 out of the last 5 years in order to get that tax exemption. If you are single or married and filing your taxes separately, single filers get up to a $250,000 capital gain tax exclusion from paying state and federal income taxes on up to $250,000 profit from the sale of your primary residence. If you're a married couple and you file your taxes jointly, that gets doubled, up to $500,000 profit on the sale of your primary residence If you were able to sell your house at that much of a profit, you would pay 0 state or federal income taxes on the profit of your primary residence. If you lived in it 2 out of the last 5 years before the sale, though. Now, if you live there less than 2 out of the last 5 years, the IRS still may allow you to take deductions if you were forced to sell due to a hardship, which the IRS classifies as a job loss or transfer, health reasons, death, divorce, or multiple births. So let's highlight this because you will need to know this for exam. Did everybody get those highlights already or no?
Yeah.
Yeah, I'm good.
Okay.
Got it.
Now, sometimes people may ask you about this. There's other programs out there, so I would probably prefer them over this. But a first-time home buyer can make penalty-free withdrawals from their retirement plan if they're to use it as the down payment for the purchase of their first home. So they could, the IRS would allow you to take out up to $10,000. However, you do need to pay it back to your retirement plan with interest, but you're paying back yourself essentially because it's your retirement plan, you know. But make sure that you don't. Make sure you advise people that if they do this, they consult with a tax professional and let them do the proper paperwork to get that money out. Because if you just take money out of your retirement plan, they kill you. They hammer you with all kinds of early withdrawal fees and taxes and penalties if you take out money out of your retirement plan early. But if you do it, you got to file the proper paperwork to do it, to use that money for a down payment for your first home. Now, there's programs out there that allow you to get, New Jersey has a program where I'll show you where first-time home buyers can get a loan up to $22,000 for down payment and closing costs. And if you live in that house for at least 5 years, you don't have to pay any of the money back. So that would probably be a better option. So there's other programs out there. So this would probably be the last resort. And even before this, I would first ask the seller to give money back to the buyer to help with the closing costs. You could ask for a seller's concession for that. Instead of taking money out of your own retirement plan, there's better ways to do it. But this is another option if need be, so we're still teaching you about it. Okay? And that concludes chapter 8. Let's do the key terms to review. There's only one of them. And let's get it going. Are you ready?
Ready.
Awesome. All right, so here we go. Tax set according to the value of the property. What do we call that? Tax set according to the value of the property. It actually means according to value in Latin.
Ad valorem tax.
Ad valorem tax, correct. Ooh. Ad valorem tax, that is correct. One is A. Estimate based on probable sales price. An estimate based on the probable sales price.
Full value assessment.
Full value assessment, that is correct. 5 is B. Value used for taxation purposes. What's the value that the tax man uses to calculate your taxes? What do you call the value of your house that the tax man uses?
Assessed value.
Assessed value.
The assessed value. 2 is C. Adjust for assessment variations. What does the assessment for adjustment for assessment variations? Because different areas of the state, you may have richer areas and poorer areas, just to make sure everybody's paying their fair share.
Equalization factor.
It is the equalization factor. 4 is D. A list of all taxable properties in the municipality. You just add up the right column, boom, you know what the how much money that the city's budget is.
Assessment roll.
The assessment roll. What letter is that? List of all 3 is E. Time in which the foreclosed owner can regain their property.
Redemption period.
That's the redemption period. 8 is F. Collection of overdue taxes through public auction of property.
Tax foreclosure.
Tax sale?
Tax sale. 13 is G. Taxable property. What do we call taxable property?
Readable.
It's a rateable. 7 is H. A reassessment of all the municipalities' rateables. Reassessment of all the municipalities' rateables is called the revaluation. 9 is I. Tax only on property directly benefiting from an improvement. Not that improvement that the homeowner does, but that the municipality does. What do we call those?
Special assessment.
A special assessment. 10 is J. 1/1000th of a dollar or a tenth of a cent is called a
Mill.
mill. A mill. 6 is K. Municipalities' financial claim against real property. What do we call a financial claim on property? How about-
Tax lien.
Okay, it would generally be a lien. So a municipality's financial claim on property would be the tax lien, yes. 12 is L. Seizing of property for unpaid taxes.
Tax foreclosure.
11 is M, that's a tax foreclosure, and that concludes chapter 8.